First thing I want to look at, S&P 500. This is the mother of all markets. Why is it the mother of all markets? Well, because every significant stock is in the S&P 500. Well, what about the Dow Jones? Now, it just amazes me every time you go on the news. The Dow futures are down 400 today. We're going to open down. Why are they looking at the Dow futures? Because nobody knows what SPY and QQQ is. The Dow futures. I don't know why, but that's what they do. But all 30 stocks in the Dow Jones Industrial is in the S&P 500. So we don't look at that at first. All the big stocks in the QQQ, Apple, they're all in here. They're in the SPY. The SPY is the mama of the market right here, mom. So that's the one I look at. So I'm just looking at the daily chart just to remind me where we are. This is the 20-period simple. That's the mid of the Bollinger Bands. I do have my Bollinger Bands set at 2.5. They come stock at 2.0, 2 standard deviations. When the markets are kind of volatile, I bump them up to 2.5. I think it's just more accurate. This is the mid, which is the 20-period simple moving average. That's what these pink crosses are. And so I note that as the markets have been coming down, this has been an area that gets pierced but fails. Pierced but fails. That big day, good. Look where it came to, right up to the 20. Didn't quite get there. And so look where we are. We're kind of right here. We're above yesterday's close, so we're still green by about 0.25%. We haven't taken out yesterday's high. That would be a number. So I immediately look at this chart and say, what's a number that I should be looking at? You can see on the daily chart right here. Well, there's a few numbers I could look at, but this is yesterday's high. This is the 20-period simple. This was the high from the other day. So wouldn't this number here be the ultra or ultimate confirmation that the markets are going to go higher? Well, maybe, but if I look left, I always keep looking left. When I look left, what do I see? Well, Birdman is really good at this. Gaps. So if there's a gap right here between this and this, then that number is significant to take out that high. But once you take out that high, you have an air pocket here. So it's very possible. Remember, what happened? Can somebody tell me what happened after this day right here? This was an up day, right? Remember, Monday, Tuesday, Wednesday. I remember it because we had shorts on here. We held on to our shorts. But what happened here? Do you remember what happened? This was Wednesday. What happened Thursday? Liberation Day. What happened to the markets? So the markets dropped right here. So does it make sense that if you breach this to the upside, you get above it? That is a major point of sell-off that we can get past. And it is also very possible that people who are trading long here might actually use that as a target and get out. It's also very possible that those that are shorting the markets here, that could be their stop loss. So if the shorts are using this as a stop loss and the longs are using it to potentially get out, you now have what I would refer to as a significant price point to keep an eye on. So I'm going to draw a line right here. That's significant. Obviously, yesterday's high is significant, and obviously this crazy day too. So on my daily chart, I kind of have an idea of if I'm long, I can kind of see like these levels. If this one breaks, it opens the door to this. If this one breaks, it opens the door to this. And then if we get above this, now all I got to deal with is the 200 and the 50-period moving averages to see if I can get above them. But like this is the upward battle for the markets to get through. But at least I kind of know where they are. So if that's true, then let's look. This is yesterday's high is 544.28. So I'm going to come over to my 15-minute. I love the 15-minute chart because it allows me to look at the markets throughout the day and really see where price action is. So 544.23, I'm going to go here. I do this every day. This is my routine. So when I give out my alerts, now you know where these levels come from. So 540, was that right? Yesterday's high was 544.28. That's yesterday's high. You got this where it failed the other day, so I'm going to put a high of 548.62. So 548.62. Open this up. Now I kind of have, you see how I have an idea of what's going on here? All right, see the high right here? See how it hits this level here? So this is what I refer to when you hear me say the holy shit candle. That's what this is. Because this is, we gapped up, we went up, we opened, and then it went, right? That's a sell-off or a blow-off candle, whatever you want to call it, sell-off candle. So the top of this candle is significant because this is where sellers came in, or this is where buyers dumped, or whatever the F. So I know that if I get above this level, that's significant. That means there's the potential to go higher. But there's also the potential that it could come up here and drop again. So I got to have it on my chart so I don't get stuck leaning into a trade. And look, here we are. So this is, you see how this is a great level? Everybody see it? Let's go left and just see if it lines up with anything else. Oh, what do you know? Well, what do you effing know? We look left and what do we see? Right here, the closing candle on April 9th, right here. We closed right there. I'd say that's close enough for government work, yeah? Let's just keep looking for shits and giggles. Do we hit anything else along the way? Is there a reason why this is a special number? Maybe not, but we'll see. Ah, look at this. Poke up through, failure. And down she went. Isn't this amazing? Look at this. Came down to this level. Whoop. What did it do? Bounce, retest, finally fail. Looks like this might be a level. Look at this. Pre-market. Pre-market opened, came down to here, and then went back up. Right there. When was that? Don't know. April 3rd. Does everybody see what I'm doing? I'm just looking left to see how significant this level really is. And what I'm finding is it's pretty darn significant. Boom. 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 And here we are, right? Now, if I go to this level, gosh, why did price end there? Let's see if we hit any. Look at this. Look at this top one here. Watch. Do you think anything's going to be there? How many of you think there's going to be something significant? Maybe not. We'll see. We'll see. Anything? Anything? Not much. Just the high of the day. Look at that. Just the pre-market high on April 3rd. April 3rd, it was the pre-market high. Anything else? Probably not. Okay. So levels, levels, levels. So how did I find these levels? Was it very complicated? No. I went to my daily chart. I just saw it. There's yesterday's high. What? Look left. Oop, look at this one. Probably should track that. Look left. What do I see? Oop, there's a gap here. Do I really need to go any further away? I don't need to go that much further because you're going to have to hit these levels before anything after, before that. Now we look to the downside and see what do we need to see down here. There's a gap here. That gap already got filled. Done. And look how it filled beautifully. Look at this. gap up in the pre-market, market opens, bang, fill the gap. And then it started to move higher, and that's how we finished yesterday. Okay. Again, we gapped up. And then fell. That's the pre-market. We opened. There's your 10 o'clock reversal. And now we're kind of chopping, dropping a little bit. Maybe that wants to come down and fill this gap. Maybe wants to take out this low. So for today, I'm going to take this pre-market low right here, 536.16. And then if I look left, oh, there's one even lower. So there's this one too. So the first level is this, 536.16. And then the other one is 533.86. Just short term, and it doesn't matter what chart you use. I'm just using the 15-minute chart because I like it. It's just easy for me to kind of, you see how I can kind of see the flow of what's going on here for the day and yesterday. See how this is kind of easy to see? We know these are pre-markets right here because it's shaded. So you can see gap up, went up in the pre-market, came down, it held, we sold off, closed the gap, finished higher, and a little loop. See how this is the convert the vert magic, right? So look, can I just point this out really quick? Let's say you took this as a shift and you did convert the vert right here, okay? Boom, boom, boom. Let's just say you did that, okay? And price is up here at the end of the day. Out of your money, out of the money, out of the money. In the last 15 minutes, 345, and it's out of the money. That's the top of your butterfly, middle of your butterfly, bottom of your butterfly. And you say, I'm going to sell this sucker for $1.80 or $2. $200 is better than nothing. And what happens in the last 15 minutes? Look at this. Boom. Everybody see this candle here? Where does it end? So I knew I drew this up the way I drew it. But if you were going to take a shift, wouldn't it be here? Wouldn't it look like this? And look what happened at the end of the day. Bang. Right into it. Do you see why you don't close your butterflies? Could there have been a better demonstration than yesterday's price action? Perfect sell-off at the end of the day, right there. That's the market maker with shenanigans, making sure that these call buyers don't get hit. I'm going to go to part 2 of my analysis of the day. So I've already you see where I've drawn my levels. Oh, hey, Michael. You see where I drew my levels for the day? I've got like a box here, right? Kind of a little bit of a box we're in. So obviously a break of this box, one way or the other, opens the door to the next level. So you really don't want to take too much of a position while it's sitting here. So we'll see. We'll see what happens. But I'm going to do one other thing. I'm going to remember these numbers, which I should be able to remember close to them. Look, 53, that's like 534-ish, 535, 536-ish. So just remember these numbers, ladies and gentlemen, 534, 535, and 536. Okay? Got those numbers in your brain? 534, 56. Okay? Puts, because it's down here. Up here, what do we got? 544s. Probably here too. What is that? 542. So let's do 42. Let's do 42, 43, 44, 45, 40, all from 42 to 48. Okay? So I'm going to write it down because I don't have a good memory. So from 42 to 48, that's on the upside, and on the way down, we're looking at like 34 down to 30, 36 to 34, somewhere around there. And right now we're at 39 in the middle. Okay, so this is my second step. I haven't looked at the VIX yet, just checking out price action on the SPY. And so now I come over here. Let me look at the actual options chain and see what I can see. Today's date, 15th, single. Let's go to 539. That's at the money. Let's just call it 540, right? So this is at the money, 539-ish. All right, so let's look at the call side first. Where do you see the most number? Where's the biggest number? Right here. What is this? 542. 219, 220,000. That's the volume right now. Remember, I'm looking at this for the first time with you. That's the biggest number right here. Yeah? 220,000, 542. What did I just say when we were looking over here? What's the first number that I said we should look at? 542. 542, 543, 4, 5, 6, 8, all the way up, right? So 8, I mean, there's not a lot here. There's some at 50. 50 starting to grow, actually. You're seeing these here. Here's 46. Here's 45. 45 has 200,000. 44 has 140,000. So you've got a concentration of out-of-the-money calls at right here, right at the line I drew, 44, right here in between, 46. And they're starting to build up a little bit here too. These are the calls right here. Do you guys see the correlation between the work that I did here just now on the SPY, checking out levels on the daily, transposing them over to the 15-minute chart, just highs and lows, swing high and low, and then I come over here to confirm. Oh yeah, 542. Wow, these numbers are working, but 545. If 542 gets busted, it's going to head up to 545. We know that it's going to do that. The market maker is going to head up there. If you break 42, he's heading up to 45. That's called a gamma squeeze. Now, whether he stays up there will depend on if there are enough puts to get him to sell off and start heading that way. So let's look at the put side. What were the numbers I gave? 34, 35, 36, working its way up to, so there's 40, here's at the monies. Where are we? 39, 70. So we're at the money right here. The at the money puts pretty strong, 273 to 132, but we were about here. Yeah. Looks like there's more puts here, doesn't there? Wow. So 541s on the put side. Let's see what else we got. Look at these hefty numbers. What did I say? Did I say 34, 35, 36? 34, 35. Not much on 36, 37, 38, 39. We were at 39 and 40. So look at the concentration here and the concentration here. Well, from the looks of it, it seems like there's more calls. Kind of seems like it. You got two numbers here at 200,000, 200,000 plus. You only have one here right at the money. Going to be very difficult for the market maker to want to have price drop below 540 because look at all these call holders. So one of the first things that you're going to, I'm sorry, put holders. One of the first things that you're going to want to see is, does the market maker turn this thing around into 2 o'clock, 2:30 in the afternoon? Does the market, dare I say, shift at around 8 to 15 minutes from now? I'll stay on with you to see, because there's a 1:15 shift, oh, by the way, or the 2 or 2:30 shift to the upside. Why am I saying that? Because one of the main missions of the market maker is to get these puts to throw in the towel. What would get these puts to throw in the towel? Price over 540. If you were sitting on a 538 put that expires today, and at 2:30 in the afternoon, price starts to go like this. Boom, 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 boom. 39, 40, 41, 42. What are you going to do with your put? Cash it in? You're going to dump them. You were wrong. Yeah, bye-bye. And that's what the market maker is going to try to do, is chase out this volume of puts by driving the market higher. But then the market maker's got a problem. I got a problem, man. Yeah, what's your problem? Well, the problem is I put price up at 542 half, but look at this. I got all these mother effers that are going to be in the money. If this thing keeps going and I get forced to squeeze, this thing could go all the way up to 545, where these guys are. If this thing gets above 545, I got to pay all these, which is why you see probably around 3 o'clock or 3:30. If it does this up to 2 o'clock, maybe at around 2:30, you're going to see a 3 o'clock. Because if you were sitting on a 545 call, you guys starting to get this? If you're sitting on a 545 call, 0 DTE, yeah, or a 43 or a 42, and at the end of the day, the market maker starts selling off 44, 43, 42. What are you going to do? You going to hold it or are you going to dump it? You're going to dump it. Screw it. See, he doesn't care if he has to pay you. Well, you know, I bought it for $475. I got to dump it for $3. The market maker doesn't mind giving you $300. Think about this for a minute. A market maker doesn't mind giving it to you for $300. Do you know why? Because if you had, let's say you had 1,000 of these, the market maker does not mind giving you $300,000 in cash. Does anybody know why? That could be one reason. Because it's a lot better than having to deliver 100,000 shares if you end up in the money. Do you know what 100,000 shares costs? At 545, $545,000 worth of stock. Do you think the market maker's a winner, giving you 300 grand, scaring you out? Do you see? $100,000 shares. Sorry. Yeah, I forgot a zero, actually. Oops. Yeah, it's closer to 54 million. Sorry. I just forgot a few zeros here. Yeah, it would be set of sale. Yeah. If you had 100,000 shares that got delivered at $545 a share, it would be $54 million worth of stock versus what? Paying them $300K? So that's why the market maker does that little sell off at the end of the day. So these guys don't, the whole point of max pain, if you've heard that expression, the whole point of the market maker at the end of the day is to exact as much pain on these call and put holders so they won't be in the money. He wants to get them to close their position so that they don't finish in the money. If they don't finish in the money, there's no shares to deliver. And that's why they do this. And I have figured out when they do it, because it's the same time zone every single day. And that is the genesis of Convert the Vert.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.